Right, I think we're live. Welcome everybody. Cassini Capital here. I'm with Crypto Twitter's favourite non-Asian quant, Amphipod Crypto. How you doing?
Yeah, very well, mate. How you doing?
Yeah, all good. So back for round two, podcast number 2. Just going to be a slightly shorter one today, and just eager to drill into your thoughts and let's see what you think about the markets.
Yeah, well, it's super interesting time. I think we're on the verge of something. You know what? I'm not too sure. I think we're due some kind of sustained rally potentially into the end of the year, or it could be some kind of big breakdown. But we've been such low volatility for quite a while now, and there seems to be something brewing. Not very
certainly just woken up a little bit, hasn't it? Like,
yeah, it's woken up.
Low volatility in that range for God knows how. Yeah,
there's still a lot of open interest in Bitcoin specifically. A lot of longs, a lot of shorts in the system. We've got FOMC. Well, we've got FOMC. We've got midterms coming up. And yeah, just generally, we've just been so kind of compressed in the price that I'm sure we're due something. I mean,
well, I guess it's the start of the move, isn't it? It's just, I think, to how long, like how, the dollar's come down a bit, the DIX has come down. It's given like the stocks and cryptos a little burst up. Some more than others.
Yeah, the question is, are we just kind of at the very beginning? Are we at the kind of the very start of this move? Or is this kind of the move? Is this just a little kind of
a little pop up?
Yeah, a pop up before we go crashing down. I mean, I mean, that's the $1 million question, isn't it? If that was easy to answer, then we'd all be minted.
I think the key that I'm watching, just to keep it as simple as possible, just that Dixie. Good old Dixie. I think that's I tell you what, I'll just share the screen, so it's I've just got to enable screen share.
All right, sorry. Go for it.
See where we are. So this is, I mean, I've been saying to everyone on Twitter, this is the thing I've certainly been watching. Like, it's interesting. We've got this move down here, and this is the 8-week, the blue line, which I'd say is the key line, really, or the key EMA. We've flirted with it a few times, but then it gets quickly bought up. Tagged, bought up, flirted with it for a few weeks, bought up, flirted, bought up. So yeah, we closed below last week. We've had a sort of a stronger open, well, I guess today, first day of the week, back above it. So I think this is the key. What I've said to people on Twitter is if we can ultimately get below it, retest it as resistance, and then fall lower, obviously that's gonna, to me, that will signify the risk on. Despite the Fed and all of, we'll get into all of the macro stuff, but I think just to keep it simple from a chart point of view, I think that then makes the decision. I mean, if you go on a daily, you can see it a bit clearer. So we've obviously, made a little low here, higher low, made a lower low. Question is this going to make now a higher low? Sorry, a lower high up here to then go and make a lower low again. So I think it's how high can this rally of the last few days, how high can this go? To me, it's come exactly where you'd want it from. If you're bullish on risk assets, this is exactly the setup you'd want, really, is it coming back to the moving averages, a bearish retest, and let's see if it rolls over and we come and make a lower low.
Yeah.
That's I'd say in the short term, that's definitely the thing that I'm watching.
Yeah, the dollar's key, definitely.
Not sure what. I mean, that was it really for that. Again, 10-year yield's a big one, isn't it? But that's still, again, above that 8-week moving average. Again, we're probably going to see that cool off a little bit more.
I mean, I don't know, the 10-year yields, that's kind of the gauge of where interest rates are going to be at, isn't it?
Yeah.
Kind of hovered around 4 for quite some time. I mean, maybe they're just going to stick around these levels, you know, between kind of 4 and 5 or whatever, you know, these general kinds of levels indicating that the higher for longer on interest rates.
Well, didn't you have that chart that you're going to show of the what was that sort of inflation peaking chart?
Yeah, that I sent it to you. I haven't actually got it. Let me see if I can find it. I think I deleted it actually. Yeah, I don't have that anymore.
What was it basically saying though? What was the?
Let me see if I can. It's from a video. It's from Game of. Do you know Game of Trades?
Game of Trades, yeah.
One of his videos, and it was basically a this indicator that kind of, I can't remember what it's called, but it's outperformed CPI for like however long, a couple of decades or whatever. I'm not sure. I think it went back about a couple of decades, and it's predicted most of the major turning points in the CPI. So
I think it was indicating it was going to fall down, wasn't it?
Yeah. So it's ticked. So while CPI is still kind of hovering up at, you know, 8.5 or 9%, whatever, this has started to roll over, which could be a good indicator that CPI is on its way down, which wouldn't be surprising.
Just trying to get the, there's the core CPI. Don't think I've got the other CPI. It's just core CPI. Yeah, it's interesting. I mean, you know, you hear a lot of people saying this, don't you? That, you know, eventually it will sort of cool off. You know, again, does that mean that the Fed are going to stop cutting rates? Or, you know, my worry is, like I said last time, is even if they stop cutting rates, historically based on the GFC and the dot-com, the bottom in the market came bloody, you know, over a year from when they actually started cutting rates.
Yeah.
And it's kind of like, because they're preoccupied with this Volcker thing, you know, where he sort of cut, you know, inflation was high, they raised rates a lot, then he cut rates prematurely, then inflation surged again in the 70s. I think they seem to be mentioning that a lot, which kind of infers that this time they're going to really want to drill inflation right into the ground and keep the foot on it for quite some months until they let the foot off the gas and stop cutting rates.
If they don't, they're just going to lose credibility, because I mean, not that they necessarily have that much anyway, but
well, this is it. I think that's key, because a lot of this is just a lot of politics, isn't it? Like a lot of economists are saying that, you know, really the inflation's, you know, is really caused by a supply chain issue from COVID, all of that. You know, so how the hell is like raising rates going to actually affect that? You know, usually in this sort of stage of the market cycle, you know, if you look at the PMI, you know, when we're in an economic contraction like now, you know, usually they want to be cutting rates. Where's the, you know, the raising rates?
Yeah.
You know, like back in 08 when we're having the similar sort of rollover, they were cutting rates all the way through this period.
Yeah. The difference is inflation, isn't it? Yeah. Well, yeah, I guess the difference is inflation.
That's it.
Like they can't do that this time.
No. But they can't unless they're forced to. And this is what we were saying before, wasn't it? Yeah. I think they're the key macro things to think, like, well, what's going to then force them to ease up effectively?
Yeah.
You know, because I guess the credibility is one sense, but then again, say if unemployment spikes, or say if, you know, the US bond market implodes like the UK's did.
Yeah.
You know,
I think that'll happen before unemployment, because in the labor market, the stats coming out for the labor market are looking strong as anything at the moment.
I know.
You know, like all the data that I've seen is look, you know, kind of better than predicted.
Well, that's it. The orange line. It's like, you know, tiny amount.
Yeah, unless something happens very fast, very drastic, then unemployment's not going to spike that's going to take quite some time. I think the bond market's the big thing at the moment, isn't it? That's what all the FUDs are around at the moment.
Yeah, I guess it's like contagion, isn't it? Because all the bond markets are linked, and the UK's faltering, same with Japanese. You know, when does contagion go to the US?
Yeah, exactly.
Because that'd be interesting if that did, you know, because like the UK are basically doing QE to buy up the bond market to stop pension funds going insolvent.
Whilst also raising rates.
I know.
Yeah.
You know, so it's like, well, you know, when does that happen in the US? And if that does happen, you know, does that signal to the markets that they are doing basically a disguised version of sort of QE, really?
Yeah.
You know, I guess ultimately, how does that affect M2? Because I think, you know, as we said before, that M2 really is what drives the crypto market, essentially, isn't it?
Yeah.
See if I've got it. Where's the got the central bank's balance sheet here? Here we go. This is like,
I guess technically that should increase M2, really, by definition, shouldn't it? Well,
exactly, and basically this is like a combination of all the big central bank balance sheets here.
Yeah.
You know, and obviously we're having a really strong sort of corrective move down. Just put a little 50 EMA on there, trusty 50-month EMA.
Yeah.
You know, so I guess, you know, this happened. I mean, there's a similar saga here, really. I mean, we're not the same magnitude back in 2018, 2019. And obviously in the crypto world, we all know what was happening here, what was happening in 2018 and in 2019.
Yeah, crypto bear market.
Exactly. So, you know, we got it here. You know, I guess as it gets bigger, I guess this becomes even more important. Obviously, bear market now correlated with this reduction in the money supply. You know, so what's going to be the trigger for them to turn it back on again effectively? Is that, you know?
Well, I think the bond market, that would be one. You know, they're not going to let the whole system go down. I mean, they're pretty much forced to buy bonds in that situation, aren't they?
It's all a question of when, isn't it? It's interesting with this relief rally. Like, let's go onto the stock market on a bit of a high time frame view. I mean, this is what I was saying before. I've shared this on Twitter. Is I'm going to put the 8 month on. So the key moving averages here, the 50 and the 8 month. So basically, so we've got the .com, GFC, and the present day. And it's basically the importance of this 50 moving average. So I mean, again, we came down, pierced it, bounced back up to the 8 month, and then eventually, then it really was the plunge, and then a double plunge with the September 11th. Same again back here in the GFC. We came down, pierced this moving average, pinged back up, stopped out at the 8 month, and then we really did fall badly. You know, I think that's like a 57% correction top to bottom. As we are present day, come down to this 50-month moving average, wick through it. Now we've bought it up, and now, I mean, this is what I said before as well. I thought around 4,000, because that's where the 8 month is. You know, and if, you know, historically back in these other big, you know, sort of huge crashes, that's where, you know, that's where we sort of, the relief rally got stopped at. I mean, if we just do a quick drawdown, this was about 57%. Let's see where we are here for this S&P. So it's about 20, so it's only kind of halfway through. If that, you know, 57% basically puts us around the COVID lows.
Yeah.
Which, you know, if this shit show sort of carries on, you know, that's kind of what I'm expecting in a way. You know, I'm kind of thinking this is going to work its way down to here until, you know, we get the Fed sort of, you know, unemployment spike and bond market blowing up. You know, they have to do QE. Want any of those kind of, you know, the Dixie really does stop falling heavily. You know, I guess the question is that too easy? Is that too obvious? In which case, I think you mentioned you've got a half expectation. We get quite a big rally here.
Yeah, I do actually.
Would that be large? Would that be like largely technical, or just from like a short squeeze, or like what would you think would drive that?
it's more of a gut feeling. I think it's more based on, I think, sentiment, how bearish sentiment is. Just a few things that line up. I mean, I think, you know, the FOMC meeting stuff, I think that's priced in. I think, you know, they're predicting 75 basis points. I think if we get 75 basis points, the market's going to continue. There's no reason to be bearish. And I know the Fed are already kind of softening the language a little bit.
Yeah.
I think the press conference is going to be more important than, it's going to be as important as how much they hike by. I think we can assume they're going to do 75. Let's assume they do. In which case,
yeah, it's the language, isn't it?
Yeah, the language, that could be a catalyst. Because even if they remain super hawkish, like, you know, Jackson Hole style, I don't think that's enough to like make the market break down to you know, kind of 2008 style, because we've been conditioned to that and it's priced in. I keep saying priced in, but I think it is largely priced in. So like, where's the catalyst for the market to break down now? It's hard to really see one, because nothing's really changing particularly. Economic data is worsening, obviously. You know, the big tech company earnings have come in, you know, really, really poor. But then is that not? See, I don't know if that's a bullish or a bearish kind of catalyst. You could see it as bullish because that's weak economic data. Therefore, you know, that kind of increases the chances of a Fed pivot. Or you could look at it the other way and say, well, the Fed aren't going to pivot, and therefore that's actually bearish news.
I think that's what most people like Darius Dale and people on like Blockworks and, you know, those kind of podcasts that I seem to listen to. That's what they're kind of thinking. They even be like Hugh Hendry as well, like another hedge fund guy, like all these sort of respected people. I think assuming, yeah, you know, it's going to just gradually just keep, you know, the market's going to keep falling until we get something more substantial from the Fed. Yeah, it's that thing, isn't it? I don't fight the Fed or whatever.
Yeah, exactly. Which has worked perfectly this year so far.
Well, now we're at the key point where, to me, technically, which is always interesting when these things are technically, we're right on that key level, right on that, you know, we pinged off that 50 moving average, really nice. We're coming back up to the 8 month, which, you know, historically has been where that's the bit that I want to see, is basically flip that into support.
Yeah.
You know, obviously it's funny here, you know, back in the summer rally, we got above it, but you can see we actually closed below. We've obviously got the monthly close, well, tonight, isn't it?
Yeah.
Happy Halloween, everybody, by the way.
Yeah.
You got your pumpkins ready. So we're going to get another monthly candle here. So let's see where this next one goes, and then, you know, subsequent months. This has, for me, it's got to be, you know, if we get this more, you know, a larger rally, you know, like I said, I was speaking to that guy who runs a family office fund. Had a really good chat about it, and he was kind of half expecting a big, almost a double top, you know, could almost come all the way back before we get this huge sort of deflationary bust. You know, which would fuck a lot of people over, I think.
Yeah, it's like that Max Payne, isn't it? Coming back to that.
Yeah.
I mean, you know, a huge rally now, convince everyone that the bottom's in. You know, we're going back to the moon kind of thing, and then the big one. You know, that'd be pretty brutal.
I mean, if we take it back to in a crypto sense and what that would mean for crypto, I mean, it's so poised here, isn't it? It's like you've got the 2020 all-time high, you've got a double bottom on the all-time high, which is, you know, fairly reminiscent to, you know, the bottom back in 2018. Now you got this almost double bottom. It's very similar to the one in 2015.
Yeah.
You know, again, squeezed beneath the 8-week moving average. We've been squeezed beneath it, and obviously last week we popped ahead above.
Yeah.
And I guess the key thing here is, you know, when we took us all that time in the summer which everyone was watching and excited. We popped above, but then it was the week after where it was like, nope, we're going back lower again.
Yeah.
So it does feel like quite a pivotal week really here. Can we flip this into support? We're doing that at the minute.
Yeah.
Just to stay like this, or we're going to get a big red candle all the way back down, and it's kind of, we kind of infer this all was just a bit of a fake out. Maybe the dollar recovers and then we start to set lower lows. I don't know.
Yeah, that's it. I mean, I think one of the two has to happen. I don't think it's hard to imagine that we can just stay at these, 19 to 21K in this range till Christmas, for example. I mean, of course, anything's possible, but that doesn't seem particularly likely to me. After such a huge move down, like you expect a bit of volatility now in, either some mean reversion or just a continuation.
Yeah.
Otherwise, it's like you have this massive drop and then it just goes flat. Like,
I really liked Crypto Tony. Do you follow him?
I've seen some of his posts. I'm not sure if I follow him or not.
He's got like the Scarface avatar. I mean, he is basically talking about a move kind of like that to then be, lower lows, which I quite like that idea. Again, to screw most people, we get a rally maybe quite sustained, but then ultimately make lower lows, because everyone's kind of, you see the sentiment, everyone wants lower lows now because they're obviously making cash. So that really fucks those people over. Then they start buying up here thinking we're going to do like, back to all-time highs the way up, and and then the market rolls over and does set the lower lows, in which case they would have been better holding the cash and buying again down here. So I quite like his idea with that. I guess that would time with the Dixie then sort of falling a little bit now, and the stock market running a little bit further maybe, before then rolling over. Did you see my post on Twitter the other day? Did you know we've seen this with the 21 and the 50-day moving averages?
Yeah, I did. Yeah,
we're right at that point where we were when this in the summer rolled over.
Yeah, so this is it, isn't it? Is this just a fake out like it was then, or are we
good? Basically, I mean, the last time was back in March, which obviously did cross, but then when we lost the 21 days support, then it it really did fall.
Yeah.
When you said before we spoke, like, this feels like another key time, and I guess something like that kind of emphasized it in a chart point of view.
Yeah, that's it. That's it. I'm just not sure I see the downside catalyst now. Like, I'm just not sure.
When's FOMC again? When's that?
It's the 2nd, on Wednesday.
Christ, yeah, another big week then.
Yeah, it is. But like I say, I'm not sure what the Fed could say that would make the market puke.
I guess it's there. It's interesting though, because they've kind of teed it up for me. They've teed it up. They threw out the dovish crumbs last week, where it's like, everyone saw it like, oh, we might have to pivot, or basically worse to that effect. Like, we might not have to be able to raise so aggressively, and like all these dovish crumbs. So they've kind of teed it up to literally whack the dove over the head, basically. Because don't forget, they did. Do you remember when they did this before in the summer?
Yeah.
So in this summer rally, there was all of that, and we were kind of debating: was that the pivot? Was that not the pivot? And it was because the Fed were dovish on the language after the FOMC meeting at this time in the summer, and then the week after, they all kept coming out saying, "Oh no, we're going to crush the markets. Basically, we're going to raise rates. We're going to do all this. We're going to carry on with QT," and then obviously it sent us lower.
But this is definitely more. That was debatably dovish. This is definitely more dovish, because they're talking about, we've got to be careful we don't over tighten. They're talking about, giving it time to see the effects of the tightening on the economy, and they're talking about potential instability in the bond market. At the time in June, this is less debatable in my opinion. That's like more dovish language.
What if Powell comes out with his big bat and just,
Well, I think he might. Yeah, I think he will. But even then, I don't think that makes the market necessarily break down. Do you? Or do you think that's enough? Do you think that's enough to send stocks below the 200 weeks and just into hell? And crypto probably follows.
Again, I don't think they're going to descend into hell overnight. If you look at, if we go down that line of argument, like you're saying, sorry, let's just move this again. If you go down that line of argument, this whole drawdown. So where are we? Go back onto the monthly, and let's see where it broke this 50-month, because this is where we're talking about. So it's right here.
Yeah.
How long was that period there, and also how long was that period there? I mean, let's just
quickly, that's true.
So when it finally broke, it was, how many months was that? Sort of, it was like a year basically, that period there, over a year.
I guess it just looks like, it happens overnight almost, doesn't it?
Yeah, because I'm super zoomed out on the monthly chart, but I mean, there's basically 12 monthly candles, or near enough as a year. It's a good year or so.
Yeah.
Which puts us at the end of 2023, which, you could see that situation. Obviously, anything's possible. And this is the thing, like, I'm open to anything. You have to be here, and your allocation's got to be the same, in my opinion. You've got to have cash. It's worth having some assets now for a quick relief rally, or maybe even a sustained rally. But I think having cash is definitely important, because if we do end up like this, that's when cash, you're going to make a lot of money if you can, look for the signals and buy it up.
Yeah.
Whereas, if this does, you can always get in after. Depends on the momentum trade. But so, when we talk about descending into hell, that period could take about a year.
Yeah.
Which is, like we said before, is consistent then with the 3-month, 10-year inversion, which I think on average, when you get the 3-month, 10-year inversion, the bottom comes 12 months after.
Yeah.
So again, that's another kind of confluence there that puts us basically, you're talking like the COVID lows at the end of 2023, which is only there, and then so it's basically like there. So it's just like a natural progression of the chart falling from there.
Yeah. Yeah, I mean, it's perfectly possible, isn't it? That, I mean, I think Gareth Soloway's been saying he thinks stocks will be lower by the end of the year. I mean, I think he believes in a short-term relief rally.
Yeah.
Into midterms. I think he was saying into midterms and then maybe sell off after.
Well, midterms are the week after, is it? Is it the 8th of November?
The 8th, yeah. So I mean, that's very short term. I don't really care about what happened like that short term, to be honest. Well, it's more, it's more like I'd say into the end of the year. The next two months is kind of the interesting one, I think.
Well, let's look at it this way. So as I've gone on about before the 8th month, we're not too far off that 8th month. In the next week, this next weekly candle, we could easily rally above that. And then for me, that would satisfy this sort of theory I've had, which is the price being squeezed between the two moving averages. So that would basically satisfy the upward move. Relief rally, that would be the relief rally over basically two weeks of movement into the midterms. With it then start to roll over and then make a lower low. Yeah. It would certainly satisfy that. But as you say, with the sentiment, the put call ratio, the way it is, you could see it even squeeze quite a bit higher. Yeah, exactly. And that's the thing to look out for. But Soloway did say that, so he thinks short-term rally and then he thinks the whole thing rolls over basically, doesn't he? Yeah, I mean, he's a bear, he doesn't think the stock market will make new highs for the next 10 years. I mean, that's about as bearish as you could be, really. I mean, to be fair, that's in line with Druckenmiller. Druckenmiller, you can't really argue with him. He's amazing track record, and he reckons it's like 1966. Yeah. Which was basically, yes, a largely 10-year sideways period, which is basically what it was here. This is how I see that. That was 2000. That there is 2010. That's a 10-year period, and it's basically sideways. Okay, he's back in the room. So basically, I was just saying, just got put off there. So we started recording again. So it's a largely sideways period. you know, over this 10-year period. So that's basically what Soloway said and kind of what Druck said as well. So, you know, there's still a lot of money to be made though, you know.
Oh yeah. Oh yeah.
We come down, you know, get a low at some point down here somewhere, then we get a similar move back up, to then maybe come down again or whatever. Like there's still going to be volatility to trade, even though it's largely sideways on a macro scale.
Mm-hmm.
You know, no basically all-time high basically for 10 years. You can, you know, there's still volatility there and it's, you know, it's lasting years and years, isn't it? It's
yeah, I mean it's sideways, but there's still absolutely enormous moves.
Yeah.
I mean, much bigger than what we've seen this year in both directions.
And again, in the crypto sense, you know, a move like that in the stock market could, you know, for some of the strong alts or whatever, you know, could be pretty tasty.
Yeah, exactly. But that's the thing. Like, if you were in 2000 now, let's say you know, if you missed the bottom in 2002 or 2003, I mean, technically you could be like, oh well, you know, it's all good. We're just going to go sideways for the next 6 years, and we'll be back down there. But you know, in reality, you know, that's a huge thing that you've missed. So like, even though it goes sideways for a decade, you don't want to be just sitting in cash for that decade.
No.
You know, you want to be you know, forget the little rallies. You know, we're happy to, you know, that but the big rallies, you want to be in there. You want to be in on the trade.
Look at it from, you know, the EMA perspective. The 8 month, flip the 8 month into support, then we can talk. You know, it was resistance. There it flipped into support. There's your momentum. Obviously, you do this on a weekly or daily chart as well, and it basically rode it all the way until that was the point where you then exit the trade, where you lost you lost the support, and then you confirmed it into resistance, and then
yeah. I mean, there's a bit of a fake out there in 2010. Just go over where it breaks down below the 8 week. So breaks down, comes back up, retests it, breaks down.
Yeah, that's a fake out, and then go.
And you kind of, I mean, I guess you'd be waiting to take out the low, really, wouldn't you? Maybe before you enter, but
I mean, this is very crude. I mean, normally with these momentum trades, I use a day, you know, the daily 50, 100, and 200 moving average, and then the weekly, you know, the 21 and the 50. But you know, there's lots of ways to do it, obviously, isn't there? But everyone's got different systems to trade or whatever. But you know, basically, the point is, even if it's sideways, there's still definitely opportunities.
Oh, absolutely. Yeah.
But again, there's no guarantee that's the case. You know, that's one reality. It doesn't mean that's the reality we go.
No.
You know, you got to think that it's largely governed still by, you know, the dollar, the Fed, you know, QE, M2, bond market, you know, all these kind of things, unemployment.
Yeah, supply chain issues.
Exactly. Yeah, inflation, rates,
war. You know what? You know, war with Russia and China, and there's it's there's a lot of stuff going on.
What do you make of some of these? I guess some of these alt moves. Then I guess you know, you're putting that largely just down to the pop we've had from the dollar coming down, and then the stock market and things waking up a little bit. Yeah,
it's interesting how the alts you know, just been outperforming Bitcoin. You know, a lot of them. It's.
I'll tell you, look at this motherfucker here. Excuse me. BNB on a monthly chart. Watch this.
I know.
I mean, it's just glorious. Like, I put the 8 month moving average again. It's just, you know, I'll show you something even more impressive than just this. This against Bitcoin, obviously all time high. It's just pure bullish momentum against Bitcoin. You know, all the way bullish. Broke the high, we're above the moving averages, and then, you know, the cooler thing really is this is against ETH.
Yeah.
So, you know, I saw Raoul Pal say something like, he showed an ETH BTC chart. And he was saying, bullish chart in a minute. I was like, hang on a sec, have a look at this one, man. I need to actually comment on this thing, but this is just holding the moving averages, just marching up until it doesn't, until this flips into resistance, then, you know, it seems to be outperforming.
Yeah, it certainly does. Certainly does.
Which other alts are you watching?
I've got a few, got like a little watch list. So look. So I'm watching XRP. I'm watching Quants. So I've got XRP, Quants. I've got Chili's, Matic.
Yeah.
Algo. And I've just got AVAX, and then just a few like random ones like PYR, XCAD, LF0, HBAR. I mean, just some ones that I'm interested in from a fundamental point of view, and then some more from a technical. So Chili's and Quant, I'd say, quite from a technical point of view, and Matic as well from a technical point of view, just because they've been so strong.
They've all what I call bullish momentum. They've got that innate formation, haven't they?
Yeah. Whereas some I'm interested in from like fundamentals, like Algo, I'm quite interested in. So it's at quite a like good value level, I think.
Yeah.
And also, they've just partnered with FIFA for the World Cup.
Is that Algo, you say?
Yeah, Algorand's.
Not looked at Algo for a while. Let's just have a look at it.
Yeah, it looks like quite a nice value zone. It's just hovering above like some major support, really.
Yeah, it's one like, okay, so it's one of these. It's I'd say this is a little bit like an AVAX or even a Bitcoin or a VET or
SAM.
It's one of these that's been pummeled, and it's just making these lows down here, isn't it? Really?
Yeah, exactly. It's got no bullish momentum.
No.
It's just I've got a thing for the project, really. I love the project, and
one mathematician to another, I guess.
Yeah, I think that's definitely going to be a winner. Well, not definitely, obviously, but I think that fundamentally Algo, XRP. I don't know a lot about Quant, but from what I've heard, that I'd put that in there. Maybe I need to do my own research, but I'd put Algo in that kind of bracket. It's just partnered with FIFA for the World Cup, which
I think did Chili's do that as well? I think.
Yeah, that was that for the World Cup, or was that?
I think so. Yeah, one of my friends on Twitter, I spoke with John. He mentioned that to me. I think Chili's and it's obviously had a nice little pop off the. Again, I like this one. It's above the 200-day moving average is always a good one.
Yeah.
There's not, if we simplify that, there's not too many. It's quite nice and clean, isn't it? Above the 200. Again, from a value point of view, yeah, fine. Buying here. And this is kind of like Algo, VET.
Yes.
All those that are down here, which is obviously from a value perspective, lovely. But from a momentum, this has proved it's got that sort of momentum and strength. Whether or not it continues or we just triple top, I don't know. But
yeah,
I think that was another one with the FIFA World Cup.
Yeah, exactly. So I think given how Chili's has responded to that, I think Algo's got a good chance of a pop. If if the markets are generally bullish, like towards the end of the year, if we do get a bit of a relief rally in the markets, then
they seem
Algo's
to
one that I'd want to be holding, I think.
These ones seem to be having that. So what I was talking to Will about this the other day. So basically, AVAX looked like this and it popped, and Sand looked like this. And literally the day after I spoke to Will about it, it popped. So I'll just quickly show you, just as you mentioned, all of those. So AVAX, again, that similar kind of structure, double bottom. Now it's popped above the 8-week.
Yeah.
And then Sand had a good day yesterday with a similar structure. Again, very similar. I mean, it doesn't look great here, but it was like a 10% move, I think, here.
Yeah.
But again, it's kind of in that crucial point now. Can we flip this into support and move maybe up to the next level? Up to, I'm watching this 50-week moving average on all of these. I mean, that would be a lovely. And it would do what Crypto Tony was saying. So you take out the high, get above, take out the high, up to here, and then filter.
Yeah.
But let's forget the moving averages. You just look at forget all the moving averages off and look at it just level to level. You kind of, this is AVAX is attractive for me for this reason. Let's just get a horizontal line. So I mean, you've got level sort of main level one there. and then you kind of got this kind of zone, and I don't know where you want to draw the line, maybe a box in there. That's basically like a 4x move back up to here.
Yeah, exactly.
It's basically a 2x move off the lows to get there, 4x to get to the next level. There doesn't seem to be much resistance other than that.
Yeah.
So as you basically said at the start of the conversation, if we can get this more sustained rally in the stocks and whatever, some of these puts have got some quite attractive.
Definitely.
Even if because I like this because it satisfies basically all sides of the argument. Like why can't we do something like that and then something like that?
Mm-hmm.
Like, why can't we do that? Like that yeah, basically, yeah. But it's a big rally. It's a 4x move. It's a great potential, but you're still putting in a lower high relative to here. Lower high, lower high, lower high.
Yeah.
And then this would be kind of assuming that stocks fall off that cliff, they lose the 50-month moving average, and they really do plummet, in which case we get some horrific move like this. Obviously not on a straight line and zigzags or whatever. Back to the end of 2023, we kind of said, didn't we? Something like that.
Yeah. Yeah, I think it's good. It's good to have some exposure to these coins. Like I've been trying to DCA a little bit into some of these alts. Just have little nibbles. You don't want to miss a move like that.
I guess the other side of the argument, though, so that's one way of looking at it. The other way is your sort of credible crypto way, where they're in Bobby Axelrod. I don't know if you've seen him. So people, they're based, and even like Crypto Caesar.
Yeah,
he's quite a seasoned player in the game. He's basically saying either we bottomed here or we bottomed here. Then we go higher, up to new highs.
Yeah.
The issue I have here is that's obviously the next level down, but the stock market would look quite different. That to me would infer the stock market breaks the 50-month, but then we don't have a drawdown anywhere near as big as the last big recession.
Yeah, unless the stock market holds the levels, holds the 50-month, and we have some kind of crypto event, mining capitulation.
Yeah.
Rumors of mining capitulation, and that's possible as well. Because crypto's held up really well recently. When the stocks looked like they were breaking through the 200-week, and all the bears were getting excited. Crypto was just chilling, wasn't it? At these lows, just not really doing anything.
Yeah.
So that could be, you could take that as kind of bullish or bearish in a sense. I don't know. It could be like a lagging effect where at some point, kind of, are we, if you look at your chart there, are we kind of at the end of 2018 where everyone was calling the bottom and then we just fell through?
Yeah, here.
Look at that low volatility there.
Well, this is what Benjamin Cohen's thinking. He thinks we're doing this.
Well, he got burnt, didn't he, in 2008, because he was heavily buying at those levels, thinking it was the bottom, and then
in 2018.
Yeah. So I guess he is going to be very cautious that's
every time I look at this, though, I just think, to me, you can see how I've charted it. That's how I see it. There's like, I just see this is more like this, and that there is more like that there. That's just so I saw his argument. I just don't see that personally. When I look at the chart, I just don't see that at all. Like, because that capitulation there looks more like that, and this whole move here is a triangle here. That's how I see it. But basically, what I'm saying is that doesn't mean I think that's the bottom, because that was the bottom. I think that's only the bottom if the macro aligns. What I'm saying is, well, we could do a new structure because of the weird macro events, and we come all the way down here, then all the way even down here. Why not? Why can't we come all the way back down to here, or even bloody lower? Like,
well, we can, but I think we have to have some mean reversion in the meantime.
Yeah,
excuse the pun, but we can't. I don't think we can just keep going down. Consolidate here, go lower. Consolidate, go lower. It seems a bit Yeah, seems a bit unrealistic to me.
Well, we can if the stock market does it, and that's the thing that I'm talking about. Because, like I say, if you look here, you know how back to 2008, that's kind of what happened. I mean, there's even more stepwise in the .com. You know, just kept marching down. You know, you make a floor, lose it, make another floor, lose it, and then eventually, years later. You know, the point being is that Bitcoin's never been through one of these events.
No.
And this has always been what's on my radar with, you know, if we lose that 50 month, you know, we've played with it a few times. What's the weekly? We played with it a few times in COVID, but it's quickly brought back up. You know, what happens if we lose this and flip it into resistance like we did here and here and here? You know, that, you know, you're saying, I guess what your argument is that you're saying, well, there's no catalyst for that move, no bearish catalyst from what you can see.
Not from what I can see right now.
Yeah.
Not from what I can see right now. I think.
You're talking more short, it's like a short-term sort of thing, or do you think over the next year could you?
No, I'm talking more into the end of the year, basically. You know, to kind of Christmas time.
Yeah.
I don't see anything. I don't see any reason now for markets to puke at these kind of like big support levels.
What happens if Jerome Powell comes out with his big bat swinging?
I don't think that's enough. I mean, that happened I mean, that was kind of what ended the summer rally, wasn't it?
Yeah, so the point being, you're kind of saying that this time then is different. You're basically saying the market's calling Powell and his big bat is, you know, they're calling that bluff.
Yeah, I mean, you know, what was it? Once bitten, twice shy. You know, it's like we've experienced that before, and maybe that's why the markets aren't rallying as much as they rallied in the summer yet, because maybe, you know, people are cautious that we're going to get the same outcome. But yeah, I think the more it's not the event itself, it's kind of the shock on the market and what the market's expecting that's going to drive the price. So because it was the first time and everyone was so, you know, getting so bullish, and, you know, it was the first time, you know, it's like the excitement, the Fed might pivot, the excitement of that. And then he comes out swinging his bat, and it's that shock, isn't it? That's what causes the fall. But no one's going to be shocked if he comes out and says about how he's committed to fighting inflation and getting inflation to 2%. And
my
no one's
only,
going to be shocked by that.
My only argument is they would be shocked in the sense that he's been thrown out, or not necessarily him, but his you know, his colleagues have been thrown the crumbs out this week, or last week, sorry, the week before, which I say, like, we've teed it up basically.
Yeah.
You know, that's so it would be a shock in the one sense where the, you know, the market, like last week you were saying it was all dovish and they're going to slow down. Now you've reverted, and now you say you're going to crush us again. You know, is that priced in, or is the market rallying now because it thinks, you know, they are going to ease off a bit, like we've said, with the crumbs they've thrown last few weeks.
I think that's why the market is rallying, but I think that it's produced a lesser rally than the last time, and I think that if he swings his bat again, the effect of that will be lesser. So it might send us back down to Bitcoin back down to 19K, for example.
Yeah.
You know, but I can't see that being enough to send Bitcoin down to 14K. Do you know what I mean?
Yeah.
That's what I'm saying, or like, but down to 16K, I think.
Well, forget Bitcoin. What about the SPX?
Well, good question. I mean, maybe back down. It could call, correction back down near the 200 week. I mean, let's get a chart up. Let's get a daily chart or something, or a weekly. Yeah, so we've had a bit of a pop up, but nothing quite like the summer rally. And we could just kind of,
It blew through the 21 week, and both of those relief rallies were just at the 21 week now.
Yeah, I mean, maybe we just grind down on that news and then we just rally anyway. You know, everyone gets super bearish again. The shorts pile in, and we just get a squeeze. The Halloween effect. I mean, the markets aren't always rational, are they?
It's going to be fascinating, isn't it? It always is fascinating, but again, like you say, it's particularly interesting time again now. How it's, you know, we've had a few crumbs, though, dovish crumbs. The market's woken up a little bit, but we are starting to come to some form of, you know, resistance, really. So as you say, you know, we've got to either flip these in support, or we're going to come, you know, Powell maybe comes out swinging, you know, we come back and test the lows, and then we have to answer the question, well, is it going to make lower lows? You know, as you say, is that the reduced effect this time because the market's once bitten, twice shy? In which case, you know, we hold the floor basically.
There's also other factors, you know, there's, you know, Powell can come out swinging his bat, but we've got CPI on the 10th, for example. And what if that comes in below expectations, like significantly below? Imagine that. Imagine, I don't know, I think we've got the same forecast again, haven't we? Something like 8.1. Is it 8.1 or 8.3 or something? You know, imagine that comes in as like 7.6 or something crazy like that. Yeah. I'm just speculating, obviously, but something like that. I mean, that is going to erase any hawkishness from Powell instantly, in my opinion, because that's actual data. You know, I kind of feel like at some point that is going to happen. We're going to get a really surprising CPI reading, and I guess it could go in either direction. I mean, do you remember what happened in the last CPI reading? It came in higher, didn't it? Slightly higher than expectation, and the market dumped, and then we had this crazy one-day reversal, like right at the lows on the S&P. We had the biggest one-day reversal in history, or something like that. The S&P. You know, I mean, it's going to be volatile, and yeah, anything can happen, can't it? It's just,
well, it's always the funny way, isn't it? It's going to go up, it's going to go sideways, or it's going to go down.
Yeah. I just feel like the market's taken such a psychological beating this year.
Yeah,
it's going to take something pretty big to make the markets puke again.
I think that's kind of like Pentoshi's argument as well. I don't know if you've seen what he's saying. I mean, his is more focused on Bitcoin. You know, that's kind of what he's basically saying here, isn't it? He's saying, look, bulls have been bullish well and truly this whole year.
Yeah.
Double bottoming on the all-time high. It does technically, I mean, it makes sense for quite a nice little, you know, mean reversion, like you say.
Yeah, just exactly, just mean reversion, if nothing else, just a
and again, it still does not rule out that you could come all the way up here and then come all the way back down if, you know, if the S&P does a fight, you know, let's say some horrific after the war or whatever, some weird thing that, you know, the macro worsens even more and, you know, whatever. Why not? You know, that's always possible as well.
Yeah.
It's going to be fascinating to watch. I'm going to have to shoot in a sec, actually.
Yeah, me too.
I think we said, about 4-ish, didn't we? So we're going to have to shoot. Is there any last kind of thoughts you want to cover?
Not really. I think we've covered a pretty broad base there. Alts, Bitcoin, stocks, 10-year yields, the Dixie, you know, macro, a little bit of macro. It's pretty good. Yeah, it's just I think it's, I don't know. Obviously I'm no expert by any means on any of this stuff. You know, I'm pretty new to it. It's more of a gut instinct, really. I just feel like we're just feeling a little bit more bullish. I know Rastani's bullish into the end of the year. You know, I've just seen quite a few like people of that kind of credibility thinking that way as well. I mean, you don't really want to just base your opinions purely on just what people are saying, but yeah, that's just my feeling, really.
It's all to play for. Fascinating. We'll have to see. I think they're the things to be watching, though. I think that's a good, you know, for people watching. I think they're sort of the things, certainly the things that we're looking at, aren't they? And the things that we're watching. And you know, I guess ultimately you have to form a trading plan around those thoughts. You know, obviously we've got our plan. I've discussed it a little bit on my YouTube channel some of the things, you know, different strategies I'm using and what we're doing. But I think, you know, really they're the things to be looking at for now. It's just, let's see, big, like say, CPI, FOMC, midterms,
Yeah.
some big events really there. Like you say, likely going to be some volatility around all those things, and got to be prepared for anything really, as usual. So
yeah, exactly.
I think for now that sums up. I mean, just to conclude on like the last video we did, the last podcast, that we were saying, I just hope it's not in that range anymore. So I guess at least by the time we do the next podcast, we said, so this is the next podcast. I guess at least it's, you know, lifted out the range to some degree. So
yeah. Well, I think I think we said last time, didn't we, that it probably would be.
Yeah.
I think we can say with even more confidence that it will be next time. You know, if it's like roughly a month's time or something.
We purposely delayed this podcast just until it moved out the range, and then decided to do the podcast. That's not what we've done. But yeah, it's just, I guess, just as it's happened. Yeah, I guess probably in some subconscious way that is why, in a way, like we waited for a little wake up, and it makes sense.
Yeah, something's happened. There's something to talk about, definitely.
Yeah, but again, something's happened doesn't mean it's going to be sustained. Doesn't mean it's going to be any significant. It could be. So let's see. And that's going to be the next thing, I guess. Yeah, next time we do one of these, it'll be, you know, let's see where we're at. Are we going to be above this price range, or are we going to be back lower?
Yeah, well, I'm calling above.
Okay,
that's my call.
Fine.
So, yeah.
What am I going to go for here? We were saying a month's time. A month's time. It's basically, are we going to have this in support and flip it higher for the next 3 or 4 weeks? Go on, I'll join you on that. Because again, like I say, what I'm thinking is a move largely a little bit higher and then to come back. So yeah, I'm going to join you. So let's see. Maybe we're both dead wrong. Let's see on the next one.
Yeah, it'll be interesting. Yeah.
Right, pleasure as usual, anyway.
Yeah. And great chat, mate. Great chat, Cassini.
Yeah, you too. And hopefully, do it again soon. Another month or so.
Yeah, awesome. I look forward to it. Yeah.
Nice
Stay safe, brother. Stay safe.
Cheers, dude. Speak soon.